In this training, we're going to be reviewing how to enter tax-deferred and tax-free investment account types. Before we do that, I wanted to review really quickly in our plan settings our liquidation order. Just as a reminder, you have the ability to set this on a plan by plan level or at the subscription level. Based on our current liquidation order, the software is going to liquidate any taxable accounts first, then it will go to tax deferred and then tax free last. You have the ability to adjust this up and down just by clicking and dragging, but keep that in mind as we go to enter in different account types. That's going to be the liquidation order that the software uses to fulfill these expenses that we have in this retirement phase. I'm going to go next to the plus button and select savings and investments. Go to the investments tab, and within here you'll see 4 different options for different investment types. We've already modeled the taxable investment in a past video, so let's look now at how to model tax-free and tax-deferred account types. I'm going to enter in a tax-free investment account for Johnny. I'm going to give this a name. And just keep in mind that whatever name you use here is what's going to appear on your reports and in the dashboard when you are presenting to clients. I'm going to go next to my balance field and enter in the current account balance. Just another quick thing, if you are converting currency, you can use this little currency converter here. So if they have accounts in various different currencies, you can use this to convert it to the currency you're working with. I'm going to enter in a purchase value, and then under contribution types, enter in the amount that they are contributing either annually or monthly. I'm going to go to update timing so that I can say when these contributions are coming into the plan and when they are ending. I'm going to set that as my start event, and then I'm going to click the retirement umbrella and set that as my end event. So these contributions will start when the plan starts and end when Johnny retires. Another quick thing I wanted to look at is the growth section. This is where you're going to model how this account is growing year on year. It's going to pull through the default growth rate in your plan settings, but if you'd also like to use, for example, a portfolio option, you would click over here to portfolio, use portfolio, and then click on the slider bar to select the portfolio that you'd like. I'm going to save and add another. We're going to do a employer sponsored tax deferred investment account. I'm going to give this a balance and a purchase value and a contribution type. Percent of income in this example. Let's say Johnny is contributing 8% of his income and the employer is matching that up to 80% of 6% of his income. We're going to go to update timing and say when he is contributing to this account. I'm going to set again the same start and end dates we did before. And then I also want to build in a step to de-risk this portfolio at a later date. So let's say right now it's growing at 6% and I want to step that down to 5% in the future when Johnny retires. I'm going to click done to save, and then I'm going to save and add another, and we're going to add in Nora's retirement account from her employer. Enter in the current balance of that account, the contribution amount that she's contributing, and whether or not there are any employer matching options on this one. So in this example, her employer is matching her contribution 100% up to 5% of her income. And I'm going to click done to save. And just to show you really quickly what this looks like now on the dashboard, if we turn on the details, you can see following our liquidation order, the software is using their taxable cash and investment account first, and then it's moving to their tax deferred retirement savings. You can also look in year view in the investment section to see what the end of year estimated account balances are after contributions or any withdrawals that are scheduled. And then if you go over to the retirement phase, you can see, for example, what their estimated balances are on these accounts at retirement, and then show how they are liquidating over time. You can even click into these, review the asset allocation and the fees in this section here. I hope that this was helpful. If you have any questions, you can always reach out to us by emailing support@planwithvoyant.com, or you can request support from directly inside your client plan, enter your question into the text box, and share the client with us. Thanks for listening.